there's no doubt China is slowing down, and there's no doubt Chinese government will do more fiscal stimulus and monetary easing. But how do we measure that how much China has done so far, and will it be enough? I would say that following points. Number one, China is doing more on the monetary easing front and allowing credits to be boosted in the official segments of the financial sector, which Chinese bank loans actually have hit a new high level since June 2016. At the same time, the corporate bond issuance has been increased and corporate bond yields has been declining. So clearly, the Chinese official channels actually have been used, especially banks have been called upon to do national duties. Meanwhile, the infrastructure spending in China will clearly picked up because of these official channels. Credit will channel into the infrastructure investment. And as a result of that, we do expect infrastructure investment growth to rebound from currently 3 to 5% to about 8 to 10% in the first half of this year. But however, that part of this strong infrastructure rebound will be offset by the housing slowdown and then the manufacturing investment slowdown. So overall, Chinese growth rate, it will continue to decline in the first and second quarter of this year before and stabilization to be seen in the second half of this year. On top of the real GDP growth stabilization, I think that it's more importantly to track the Chinese nominal GDP growth rate, which in the past few quarters actually have slowed from 12% to about 9.1% in the fourth quarter of this year. We do expect the nominal GDP growth to fall to around 8% level. And I think that as a result of that, the corporate revenue growth, corporate profit growth will also continue to fall because of that. Overall, compared to the previous stimulus cycle, I do expect this China's stimulus cycle to be slightly different from previous time. For example, that credit easing rebound, the magnitude of the rebound will be smaller than the previous one. And also to do with fiscal stimulus, I do not think that everything will be placed on infrastructure spending. A lot of the increase in the budget deficit level and then the government spending will be focused on the tax cut, including household tax cut and corporate VAT tax cut, which will be a positive, a long-term factor. However, in the short term, the money multiplier of these tax cuts will be much smaller than infrastructure spending. So that's why we think that it will take longer for China's fiscal stimulus and credit easing to work on the data. We do expect the second half of the year to only have stabilization in 2019.